Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. What are interval funds and why should you avoid them? Here's Brent Wilsey, president of Wilsey Asset Management.
Thank you, Roy. And yes, interval funds, there's something you want to avoid, and they're becoming very popular. And it's kind of funny. Investors are always looking for an investment that has no risk, no volatility, high returns, no taxes. And I got to tell you, there's just not anything out there like that. But these interval funds are something that you want to avoid because it almost sounds like they could be that magic investment. Well, let's talk about them. And we've had clients come to us that have had these interval funds for years, and they can't get out of them. Why is that? They have like an average usually whereby it can only take from this fund 5% per quarter. Now think about that. If you have $100,000 in the fund, first time you can take out $5,000. Now the next quarter is not $100,000, it's now $95,000. 5% is now about $4,500. So it's going to keep declining, but you'll never get to zero. So it's going to take you years to get out of these funds. The most important thing is don't get into them, stay out of them. And I just don't know why people don't do good quality equities that have good valuations to them and so forth. These are being sold to you by your broker, and I will tell you, if a broker is selling these to you, I believe you should find an advisor, not a broker, because he or she is there just for sales. But what I really don't like, they're sold saying invest like the wealthy, and that just bugs me when I hear that, because yes, the wealthy does buy real estate, yes, the wealthy invest in equities, yes, they do debt, but they don't do it through these funds, and you should not either. What they're investing in is private equity, private real estate, venture capital, debt equity, all these type of things that are not liquid. And when things fall apart, they're not liquid. You can't get your money out. And when I say up to 5%, you may not even get 5% from it. It could be even less. The other thing I always talk about is how Wall Street, the fat cats, make all this money off of these. Morningstar did research on it. There's about 307 of these funds out there. They did research on this, and the average fee they're charging is 3.02%. Now, think about that. That's the average. It could be as high as the one that you got into or trying to be sold on, 4%, maybe as high as 5%. These are very high fees, and why is that? Because they use something called leverage. And leverage is where they borrow against something to enhance returns. And it works great when things are going up. But things don't go up forever. And when they turn and go down, that's when the bottom falls out. And you can actually lose all your money in these funds because of the leverage. They had to give that back, and they lost all the money of those. So stay away from these. There are for the brokers make big dollars on them. They are not a good investment, very high fees, and they're not like investing like the wealthy. Don't even think that. All this information does come from our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. We do a newsletter that goes out every Friday at 5 o'clock with all this information on it. We also have on there a new week, another warning for risk about the S&P 500. Is your 401k worth less than you would like it to be? And also to stock buybacks could be at their highest in nearly 40 years. All this information to help make you a smarter investor. Go to the website again, smartinvesting2000.com. Great information there for you. You will become, I guarantee you, you read the information, you will become a smarter investor. Smartinvesting2000.com. Roy, back to you.
All right, Brent, thanks so much. The preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management, and we will be right back right after this.